Hi, I'm Timothy Pope with another China buzzword from Shanghai, helping you to decode China's business world. Today we're looking at a term that came up at China's two sessions, which has just concluded: ultra-long-term government bonds. In the government work report, Premier Li Qiang said that the Chinese central government will issue 1 trillion yuan in special ultra-long bonds this year to finance major projects. That's almost $140 billion worth of new debt this year, with more of these bonds to be issued in 2025 and beyond. Let's start with the basics. A bond. That's essentially just a loan, in this case to the Chinese central government. Ultra-long bonds can mature in anything up to a century. The government work report doesn't specify a maturity term, but we could be looking at around 50 years. That's still a very long time in financial terms, but it's likely to catch the attention of buyers like pension funds and insurance firms, companies which like long-term investments that have good yields. So China issues these bonds and gets 1 trillion yuan. What now? This money is going to be fiscal stimulus for the economy and will be funneled into projects that align with what the work report called major national strategies. So now you might be thinking, okay, so the government's raising money to support the economy. What's new? Well, these bonds are being issued by the central government and not directly by local and provincial governments. Chinese local governments are already dealing with a lot of debt, and we've seen economists greet these bonds as a sign that Beijing is willing to pick up more of the burden of financing the economic recovery. Some have even suggested that these bonds might start to replace local government-issued special bonds as a means of financing China's strategic economic goals. Also, these special ultra-long bonds are a pretty rare thing. According to some calculations, this will only be the 4th time they've been issued in the last quarter century. It's worth noting too that China has set this year's deficit-to-GDP ratio lower at just 3%, and these special ultra-long bonds won't be included in the deficit. Nor will the 3.9 trillion yuan in special purpose bonds that local governments will be allowed to issue in 2024. That's all for now. Check out our previous videos and tune in next time. See you later.